Welcome back to the Eric Krown crypto channel, where we are once again all in for the tech as Bitcoin does pull out some pretty nasty downside moves in the overnight session here. Actually missed that last little major wick down as I was sleeping, but got to enjoy all of the fun before that. Anyways, with that said, I would like to sincerely wish you the best and the happiest, even during these more distraught times. And we're going to be going over the short-term time frame in this, as we have hit the more higher-term time frame targets, and now what that sort of means for the next few days here, and then perhaps mediate that with some more long-term analysis if time does allow. Other than that, I should humbly request that if you do find this content valuable, or if you just want to get back in a nice and free way, the like button is the easiest way to do that. You can always dislike it at the end if you dislike it. It's all good. On top of that, Instagram, a bunch of scammers there. I only have one account. It is in the link description below, as is the Bybit shill link for some good old leverage trading. As always, when it comes to leverage trading, I strongly suggest do not doing it unless you already have a winning strategy, which you can do without risking any finances by simply back testing on a paper or testnet account, or even using the Krown trading application, which does have a trading journal over here, and that is also for free as well. Only until then would I suggest maybe considering it. All right, first, so let's start off with this chart over here. I want to once again follow up on this one, as the target has been not just hit but smashed, and that is the daily volatility versus stochastic chart. First things first, we start off with the daily BBWP over here, representing volatility, the dispersion of returns, and anytime that we have seen it get down into the single-digit percentiles over the past couple of years, the expansion phase from there has on average led to about a 20% move. Now, we did say that because this current one over here was down for so much longer at a more extreme pace, well, the expansion phase from that is probably going to be on the upper end of that, which is maybe closer to 30%. And that's actually what we've gotten thus far. In this case, obviously, daily stochastic momentum was giving us the direction on this as of just a couple weeks ago in late April. And in this case, I believe we have played down almost 30% actually. About 26% from the expansion. So very much in alignment with that. Yes, I do still think that Bitcoin can maybe come back down and retest around these lows, but ultimately I do think that Bitcoin very likely puts in a little bit of a bounce rally off of these lows first and foremost, which we're basically seeing right now. Actually, I mean, Bitcoin's almost $3,000 off the lows. I think you could very much say that. So this is playing out as intended, or I really don't want to use that terminology, because that's not what real trading is. We're looking at statistics. We're looking at probabilities. That's what we're looking at. That's what I want to focus on. I don't want to get into this fucking it was exactly as predicted. No, you can't predict shit. There's only statistics. There's only probabilities. Anything else is silliness. Other than that, the things that do make me look at this as likely to bounce around this region is, one, round psychological even number. Many people looking at $30,000, which is likely going to bite us in the ass later on. But for right now, okay, we have a major volume extreme here. So this is a cataclysmic volume event, I would say, at least in the context of the last year. Obviously, last summer, like literally 1 year ago, we saw much greater over here, but this is like the first major spike that we've seen in a long time now. So this is of particular interest, and usually a good short-term, at least bottoming point, which is what I believe that we do have. Anyways, other things that do suggest that Bitcoin is likely putting in a nice short-term or medium-term low, which perhaps could be a macro low over time, although I do reserve skepticism about that. Again, pointing towards the weekend's video, which, if you're more interested in a long-term macro analysis, the video from Sunday in the long-term analysis playlist still very much relevant. In this case right here, we do see daily BBWP is, up to like 95, 96 percentile right now. It actually jumped up about 40 percentile from 50 to 90 plus in just 1 day here. So this is suggesting, or at least it is suggesting, that we probably are going to be looking for contraction phase relatively soon. Contraction phase equates to likely correction within the current context of a downtrend, bounce. Of course, all lower time frames below this are already redlining here. Here's a 12-hour, here's a 4-hour, for example, and so on and so forth. So, very likely looking for a bit of a corrective phase here. Again, there might be one more sweep of, around the lows, but ultimately I do think that we have a nice low end for now, at least. Anyways, other than that, as far as the higher term timeframes go that do suggest a bounce, remember, we did come off of this region over here. Sorry, let me pull up the macro chart. This is the 0.5 fib, obviously, and this is a macro fib from the ultimate high to the ultimate low of the past market cycle. And on a closing basis, we do expect a bounce from here, and so far so good. On top of that, what else do we have that does suggest bouncy bounce times? Over here, we are seeing our first sort of spike into negative funding rate territory. it is kind of questionable just because obviously you do expect negative rates and a strong downtrend, just like you expect positive rates and a strong uptrend. But hey, a little bit of short-term hopium, I suppose, right there. And then on top of that, if we go over here to our stochastic momentum charts, you will notice that on the daily, specifically for CME, this is a big one for me. If Bitcoin closes above the pivot here at 30,640 today for CME, which I believe is 5 p.m. Central Standard Time, then very likely we do initiate that corrective bounce here. So I'd keep a keen eye on that region. Obviously, other lower term timeframes pivoted around that same region as well. If we go to the 6 hour, 30,600, pretty much the exact same number. 4 hour is showing about 30,000 even. So ultimately, I'm looking at extremes on BBWP plus momentum turning up as indication of a corrective bounce. So the question becomes, where does the bounce likely come up towards, assuming that we do play it out? Well, let's go back to this chart over here. Let's go down to a lower term time frame and let's denote a couple things. First and foremost, we do see the gapola from CME coming in from last Friday to this Monday open, and that's at around about 35,000 bucks. And that is also, if we take a fib of this current range, at the 382. So I'd say anywhere between about 34.5 to 35,500ish region is fair game there. Doesn't mean it necessarily needs to get there, but anywhere within that box, I would be looking for a bit of a pullback and then come back to it after that. I wouldn't necessarily call like a full-on collapse after that, nor a continuation. It's a nothing. It's just, for right now, probably looking at a bit of sideways and probably up with maybe one more test back down around about 30,000 bucks. That's completely fine. Ultimately, though, I do believe that long-term risk is lower. So just as a general sort of market psychology thing, or something that I've kind of noticed myself and many others as well, I'm sure, or I know for certain, is that anytime that you do have a major number like this, 30,000 bucks, which many people are talking about, it was a target for a lot of the bears. It's been an area that must hold for a lot of bulls. It's something that just keeps on getting spoken about in the media. Many times, or almost always, it'll bounce off those regions initially, and then perhaps a few weeks later, rolls over, and then everyone fucking pukes it out. And fair enough. And remember, we do have several things that do, suggest lower over time. So I'll get into them right now. I want to present something that's actually new for this particular stream here, and that would be this chart right here. Okay, so this is a bi-weekly chart, and what we're going to be looking at is the deviations from the green moving average, which is a 55 exponential. In fact, I'll just get rid of everything except for that, so it's nice and easy to see. And I'm talking about this baby right here. Anyways, anytime that we have seen a deviation from it, as Bitcoin, puts in its macro cycle lows, that deviation has had well, I'll just show you. It's been pretty consistent, basically, is what I'm going to try to say. And what I mean by that is that from the break of, hey, this is not, oh, no, it's on this chart over here. That's why. Yes, here we go. Sorry, the other one was relevant for a weekly, which we'll get into soon enough. But the deviation from that green 55 towards a low, like the ultimate low in that case, the generational low, if you will, has been, on average, pretty consistent. In this case, you can see coming in back from 2014, 2015 market cycle. Let me actually do this properly because this is a little bit off right there. There we go. This one was about 50% from high to low on the break of the 55 in this case, taking about, and let me actually get this right as well, taking about 28 days, so about a month from the actual break itself. Obviously, Bitcoin still took 3-4 months to reaccumulate on the lows, and basically about a year before it ever really did anything interesting to the upside yet again. But yes, that was very consistent with what we see over here in even 2018. And this one again taking about 28 days from break of that 55 to the next major macro low. Again, it takes about 3 months before Bitcoin gets going again, but 46% to the downside. And you can compare that again with the Rona dump over here. This one doing about 45% to the downside. This one really done basically all of it in 7 days, let alone 14, but basically one period. Again, this one was more of a black swan, if you will. And then what do we have over here? Well, we can kind of forecast these sort of things, I suppose, get a general guideline. I'd say on average about a month, so 28 days, give or take, probably 7 days from that number. And if we were to shave off, and keep in mind that this number is going down over time. So we start off 50, 45-ish, 46, and then 45 about a year later. Ultimately, we do expect probably somewhere more around 40%, if you will. And that puts Bitcoin, around low $20,000 territory, about 21,000-ish or so. Obviously that's confluential with a few other things as well. I think everyone, like the next meme within this market is going to be Sailor is going to get liquidated. I don't know how true that is. I don't even know if I really care if that even matters, to be honest with you. These things have been in the charts for a long time now. Also on that note, we can bring up this chart here yet again, which is right here, is the monthly chart. It hasn't gone away. It's been relevant ever since we pointed it out in January and February. And we have the monthly MACD cross to the downside, represented by these green vertical bars, also losing the moving average on the PMARP over here, but less important. And then the final sort of nail in the coffin was the closure on a monthly closing basis below that white 20 simple. That's what really catalyzed the drive down again to that green moving average, which is a 55 exponential. And in this case, boom, about another half year, and then finds its lows, and then about another year it gets going again. We can see the same thing over here in 2018, closed below all the way down to the 55, bases there for about a quarter, and then up again, same thing over here in the Rona, and then once again, or perhaps the same thing over here as Bitcoin did close below the white 20 simple, obviously already got the monthly MACD cross the downside much earlier within this year. So taking its time, obviously, and that would be about 25,000 bucks. Again, you can get wicks lower, that's completely fine, but ultimately that's kind of where I'd be perhaps looking for long term if this bounce attempt does roll over, perhaps over the summer. Now again, I'm notoriously terrible with timing because I don't think that you can actually reasonably do it, but I'd imagine probably over the summer. I think that we probably do see the lows in this market, maybe around like end of summer or early Q4 of this year. What else do we have? Okay, all right. Yes, I forgot to mention this. We also have the Silver Cross over here. The Silver Cross, very similar actually to the prior deviation that we looked at in terms of targets, but I suppose worthwhile to call out yet again. We did an analysis on this over the weekend and I believe yesterday as well. All of these red circles represent the Silver Crosses to the downside. Same sort of thing basically, but you can see that would imply, somewhere down around here. And that also is, I would say, confluential with the 618 target. And then the last thing, should I even bring up the 5-day volatility versus momentum chart? Probably shouldn't even bring this up. You already know. But basically 5-day BBWP versus momentum. We have seen extreme lows on the 5-day BBWP, so a lot more stronger than the daily, of course. Again, you can get daily bounces within the context of a 5-day trend here, but ultimately, anytime that we've seen it this low for the past couple of years, the expansion phase from that has on average been about 45%. Done over the course of about just over 40 days. So for right now, we've seen expansion, I'd say officially as of, late April. So about 2-3 weeks into this right now. Probably have another few weeks to go, to be fair. And 45% on average, again, that is an average, but that would forecast a price target to the downside from that expansion point towards about 25,000-ish, which does show up many times. And then, of course, this is valid. And actually, we just got another 5-day closure here. And the number has moved down significantly. So I would potentially call, lows in, or at least a major corrective rally if we do see price action pop above this specific level, 38,700 in the next period. And that number will naturally come down as we close into the period after that. But for right now, correcting heavily there. So what I'm trying to say is that pressure remains down, and those targets are still, in my opinion, or at least fiscally speaking, valid and worthwhile to be aware of as long as this condition is met over here. So the number has significantly moved down, but still not out of the way. So I think that's a good place to leave off on this particular video. I want to wish you well. Stay safe within this market. There's no need to necessarily be a hero. Even if you do think that this is the ultimate macro low for forever and it's never going lower ever again, it's very, very likely to spend a bit of time going sideways there. So I think I'll leave it right there. I want to wish you well again if I already haven't, because my brain's not working properly right now. And with that said, take care and see you hopefully soon.